Welcome to the Twomey Stock Market Report. I'm James Twomey, and this is December 8th, 2022. Well, lots developing, and let's go over this. We're not going to spend a lot of time here on the intro, but I do want to cover one item, and that is where is next, and are we driving this market, selling it, or holding? That's a very good question, and that's what we're going to focus on today. Let's face it, we've had some pressure on our holdings. The energy sector, we've made some major changes to it. We're still long the TLT and UBT, which is saying yields are coming down. The UBT is up 18, 19% in the last several weeks that we've entered that trade. So some pretty good positive indicators there. That tells us that yields are stabilizing or coming down. What does that mean? There's less as the market is predicting, there's less likelihood that the Fed's going to raise rates drastically higher. As rates go up, in order to sell bonds, they have to raise the interest rates or the yield on that bond. The fact that TLT is coming down, that's predicting that we're stabilizing at least. It may be just a bounce. It's a little bit higher than a bounce. We'll look at that on our technical charts, but we're holding that for now, and that's telling us we know that the Fed's only going to raise 0.5 in December. They're talking about 0.25 to maybe 0.5 in February, and then maybe a couple of 0.25s in early of 2023. That tells us inflation's starting to stabilize. It's not coming down drastically, which, we've said it 1,000 times. Inflation doesn't start overnight, and it doesn't end overnight. It's here for a while, folks, and that's going to affect a lot of our trading. But overall, we're starting to see it level out. And the market, even though this week they've talked all about recession, we're going to go into that a little bit. So we're going to look at some of those things, the 120 versus the daily, should we buy or sell? We're going to look at the 50 and the 200 EMA, how that's working, and what's next. And we'll do a quick sector review, right? So what have we talked about here about the fundamental? We have our 4 tenets of recession that we watch, right? We've heard nothing but recession talk the last week and a half. All right, inverted yield curve. Yes, all year long we've had the inverted yield curve, between the 1, the 2, the 5, and the 10. Let's face it, that signaled a recession. We had a down market most of the year, no surprise. 2 quarters negative GDP. During the height of our bear market, we really got, saw that happen. And then we got a quarter come in positive after that. So we've sort of abated that issue. Now we're hearing new talk. Oh, we've got negative GDP coming up in the future of 2023. We're not in a prediction business, but we got to keep our eyes open for that. PMI below 50. Well, even though GDP erased its, recession, point of view, PMI now is coming in under 50. We've been watching for that all year long. We were really interested if that happened. We felt that, with the negative GDP, inverted yield curve, either PMI or employment rising, bang, I would say all sell signal. We got the PMI come in under 50 for the first time. Is there a chance that we're going to have a recession mounting? Could be. Why does that mean? We're not 100% manufacturing like we used to be, obviously, in the U.S. We're more service and softer skills. But with that said, it means if manufacturing is waning and it's below 50, they're not going to make as much because that means inventories are building, less is being sold, less is being bought, less is being needed, less raw materials. That manufacturing fits into all those categories. So what happens? They're going to lay off people because they don't need to build as much. If they start laying off people, that's going to add to our other tenet, expanding unemployment. High tech's been hit pretty hard. The infrastructure bill, the CHIPS bill, the green bill has all added trillions of dollars. It's keeping people employed. It's keeping people employed in that sector. High tech has not really benefited from that yet. That's been negatively affected because there's not a lot of spending needed in that area. It's been spending in the harder sectors, if you will, industrials and materials, and we certainly saw that run up. We're also seeing that sector flatten out. So, a lot's happening here. Unemployment, less openings are out there, but we're still at 3.7. We haven't really seen Oh, that 5% that would tell us, hey, we're going to have a market sell-off. So I believe, not in the prediction business, but it's looking like, yes, employment may tick up, but with the fact that the Fed's going to be reducing its hikes and probably slowing or abating and going on hold in the first quarter of the first year at some point, that usually will sign the markets are predict, looks into the future 6 months or so. They'll start buying, and even though employment's going up, so I think we've had in one of our market segments an analyst, and we gave a lot of charts and figures that the Chemplist has posted that we may see in this time a lagging factor in unemployment, and the market's racing off. So more to tell, but that's the way it's starting to shape up. So let's go into some of our not our sectors. Before we hit our sectors, I want to go into the diamonds, right? That's our industrial area that we've been talking about. If we, short term, we've got this new trend line, this purple starting to develop, and it's been broken. Our old trend line, upward trend line, that was broken. We've got our stochastics right down here at the bottom, very negative territory. The red is still above the green. The green's trying to fight its way up. The MACD, it's still positive territory, but the green dropped below the red. All that's saying there's selling pressure. We've got, we definitely came down this week. We saw a couple of our positions, first thirds kick off. Some others we got out. And then, it's trying to fight back. If we can get here above the 9 EMA, then we can start considering adding and we got to get back into this purple trend line. We look at the 120 minute, and the 120 is certainly, we break up the day into 4 segments of 120 minutes, and we're getting some bounce here. The stochastics are moving up. We're not into the 70, 75s. The MACD is still negative territory. So, we haven't had the 9 cross above. We don't have a buy signal here at all. But we haven't confirmed a sell signal in the daily, so we're holding off on our final positions there. So we're on the watch. Should we add? Not just yet. Should we sell? Not just yet. SPY is another one we look at. Technically, we're looking at the SPY as, let's face it, overall, this red line, downward trend. We use this as the broad market, so that's our major. We've seen that negative trend. It did break above it slightly. Every time it hits above this is 2022 beginning here. You come down here, it hit that and it bounced down. It hit that and it bounced down. We got above this. The reason why this time we thought it might have some staying power is because the length of time it took 3 weeks to get above that and close above that 200 EMA. And that tells us that the market's got breadth and it's expanding. And we thought that it would technically give us a little bit stronger in case there's a downtrend. But we are getting close to a sell signal there. The good news is our fast oscillator, even though it went to zero, it's coming near zero. It's coming back up and it's trying to fight a positive trend. If we can get that up into the 70s, buying is going to return. The MACD turned down, still positive territory, but a downward slope that says buying pressure is still there. So we've got that little bit of a fighting. It's the fast stochastic is saying there are some buyers coming in. It's just not going to be a lot of volume going the rest of this year. There's going to be some ups and downs. So it's really hard to trade in December because of that. You get a lot of volatility because of low volume. Things can be swayed quite fast. But right now, we're holding course. Let's see. XLI, just like the diamonds, that had the 200 EMA. The 50 had crossed above the 200 EMA. We've got all positive numbers up here. The RSI has come down from the low 70s, and we're down into the 50s. 57 here. The Dow Jones, the diamonds are down in the mid 50s. They were up in 71 last Friday. So we said that if we could get the RSI to level out and come down into the mid 50s, that would be a positive relief to the market, and we could probably go sideways or maybe get another chance to buy in if it goes below. And we expected the 50 to 55 range to to be the kind of holding area. If it starts dropping below that, then it's we're going to get a sell off here for the end of the year. A little early to tell. We don't know. We could go in the 120 minute here, and that's not really going to be any different than we see in the diamonds. It is trying to bounce off these lows here. It did get I look at the 120, these, 4 segments out. They break up the day into 4 segments of trading bars. I look at this. Are we hitting lows and then moving up and getting higher highs like here? Higher high, higher high, higher high, higher high. Or are we getting lower lows, right? A low, a lower low, a lower low. And we're not, we're trying to fight back up here, but this is waning. We're gonna see. We don't have a add signal yet, and we don't have a sell signal yet, but we did get out a portion of this. A couple other things I want to look at. Microsoft. This is a alternative play to the Nasdaq. Nasdaq's getting beaten down. If you look at the daily chart here, the trend line has been broken, right? This Twomey trend track line, it's been, broken. We're starting to develop a new trend track line that's negative slope, and that's telling us, pressure on the selling. But what's different here? Our fast oscillator, the stochastics, is fighting back, and it's fighting back at the 50 range, 45-50 range. That's really good because it didn't go to the bottom like our SPY, right? MACD is still positive. Yeah, it's trying to develop a negative slope, but let's hope let's hope it's not a good trading policy, but that's showing a little bit of staying power. If we can maintain that, that would be good because we need the technical sector and we need the small caps to really reignite to keep the SPY and the diamonds moving forward. We're not quite there yet. It's too early to tell. But if we look at 120 minute on this one, the same story, right? We kind of flattened out here at the lows. We went up, made a couple of new highs on these shorter segments. And then, we've had this huge downslope, and now it's fighting its way back. We're getting near actually a 120 minute buy signal. So, we're going to keep our eyes open. We're not, we're going to let the technicals help guide us. Fundamentally, we kind of feel that the market is really abating a little bit on its rates increases. Yeah, we got a lot of recession and the economy slowing, but we expected that. So, we've got a bias that we want to be long. We want to start, entering long and getting a little bit longer into, for the first half and first quarter of next year. That's we've developed that, but we don't want to have our bias go to the point where we don't sell when we should sell, or we don't buy when we should sell. So we've got to be careful here as we're seeing. What I'm trying to say is we're not yet adding, and we're not yet totally a sell signal, but we're at that inflection point. So we've got to be really, really careful. I want to go over TLT. TLT, we've had a great run up. We saw the RSI up into the high, near 70, high 60s. It's still there. Relative strength index indicating that the market is a little bit, getting near oversold at 69 today. Stochastics are up there, high positive territory, very strong. MACD, our moving averages telling us very strong. Everything's still pointed to hold our longs. No need to sell just yet, but we are above the Twomey trend track line. So that's, we're at the 0.618 retracement level. We expect some leveling off those high RSI. We saw with the TBT, it could stay extended there for quite a long time. As long as the trend goes in the same direction, that's what we're having here. But we do expect that yields is going to, we're starting to see that the market is telegraphing us that we may have ridden this about as far as we can go. We may be starting to reevaluate our positions there. The UBT is certainly the 200 version of this 2 times, and that's running up almost near 20% gains for us there. So we'll be changing our stops again this weekend in our market report, and we'll be, looking at the first third anyways to protect our profits there. We can always get back in, and the second third will be moving that up as well. So we're getting at and if it does keep racing up, we'll be fine. If it pulls back a little bit, we can always get back in, and we'll play that accordingly. So I hope that gives you an idea of what we're thinking. Are we in the buy sector yet? Ad sector yet? Not quite yet. We've got some negative news coming with that PMI. If we look at our sector table, materials, we're up there. They're kind of staying up there, the 20-day and the 1 month, but it is slowing down. Look at energy, way at the bottom, and it continues to drop. We've repositioned ourselves accordingly. Industrials, which we've been long, it's doing okay, but it's, third from the bottom. That's telling us things are shifting. I want you to, consumer discretionary up top. I know I'm flipping around here. I look at the gaming sector. I look at the casino sector. A lot of them, way at the upper range. Too late to buy in those. Looked at the hotels. Booking.com's way up. I look at Marriott. That's not a buy signal even yet. I don't know. That hard to say, because I know airlines are coming down a little bit. There's a lot of reasons for that. Part of it, economy slowing. We're going to really, what's happening with that, they're a predictor of the future as well. I will tell you this: January is not a lot of airline flying. It's really around the holidays. So we ran up a lot of ticket buying, and now January is always they're giving away flights. I mean, the prices. I do a lot of travel in January, February. Go to Florida to play some golf. It's a lot warmer there. And you know what? Cheap flights, usually, I don't know. I haven't looked at them yet. I wait and book them last minute. No problem. And so I would expect the airlines to come down, and we've seen some of that. I don't know if that's recessionary or just, seasonality. So we'll see there. Utilities are rising. That's a good sign. That tells us yields are flattening out, and people are going to spend more money in the invest into the utility sector because yields come down on the bond side, but utilities don't move as much, and they pay a good dividend. You can get a better return sometimes in utilities. I've been long XLU, the utility sector, for quite some time. I did not send a buy signal out on that. A lot of reasons why for that. That's also flattening out here at the 0.168. So the market's definitely at an inflection point. It's trying to tell us December is a tough time to trade. So the market's, because of the lower volume and volatility can spike up and down. So more to come. You might be seeing some buy signals or some sell signals, and I'll alert our subscribers real time on email like we've been doing all this week. And we're going to maintain profits. We're not going to stick around long. If we get some preliminary sell signals, we can always get back in. If it looks like we can add, this would be actually a great time to add if we can, and fight through December, and then the first of the year market takes off. It's looking that way, but we need everything to form and tell us that. The PMI is telling us it's not going to happen. Unemployment, I don't know. GDP, I think it's going to come in positive, but we're going to see all this fundamental data. I've been looking at a lot of stocks. We're getting a lot of shifting in sentiment out there. We're going to see the energy trade start going elsewhere. Very interesting developments. So look at TwomeyStocks.com. That's the number 2, MEStocks.com. Sign up for our trade alerts, try our market newsletter, and it's a great way to stay abreast of the market. And if we got hot trades, you're going to get them right to your email, desktop. What a great way to trade, following someone else's patterns that have got a successful process. And we don't overcomplicate it. We meld the fundamentals with the technicals. The technicals we use as our guidelines, like we went over here, buy and sell signals, right? Fundamentally, where are we moving in the market? Are we developing a bias, or are we following fundamentals, right? That's what we use those for. We don't buy at the bottom. We don't sell at the top. We get that sell signal. We go all in and hard, and we get that trend. If the trend fails, we get out, and we get out fast. best way to make money is to follow a positive trend. And that's what we do here in the market at the Twomey Stock Market Report. All right, have a great day. We'll see where this market goes. If we can fight this little bit of selling period off, it may be a good time to add. If not, we'll have to get out and wait and fight for another day. I'm James Twomey, and today is Thursday, December 8th.